Speaker John Willok from Toronto is Senior Vice President at dxFeed Data Solutions, a company that is behind probably 8 million number of end users around the world, behind significant trading platforms such as Thinkorswim and many others. John, my first question to you today is about Web3 enabled data and its reliability. How can we, in the future, present and future, get different sources of information in a way that mitigates risk of manipulation of the data, something that is reliable, efficient, and commercially attractive to be provided as a service to a broader community of users around the world?
So maybe even just an opening word or two, because I'm not sure if everyone in the audience is aware, but what Web3 enabled data actually represents, and sort of why what you're talking about as far as resilience and quality of that data is important. And I think so. Just a couple of words on that. Essentially, what we're talking about is the ability for decentralized protocols, blockchains, whatever you want to call them, to be able to ingest outside information, which it's utilizing for any number of purposes. I think for a lot of this audience, we're probably talking about financial services type of applications, but it could be other things as well. So an example would be, you could have a betting contract of some sort that is looking for a sports outcome, and that data element of whether team A is won or lost needs to come from some outside source. The ability for somebody to create some sort of devious supply of information where that information is in fact falsified, and they can essentially induce an outcome that perhaps pays them or does whatever it does in a malicious intent sense, is really the core problem of oracles and provision of data from that outside universe in such a way that you are sure that the data will arrive. So concerns about resilience, as well as ensuring that the data is truthful and accurate as far as that true outside information being precisely what the smart contract, which has no ability to generally judge such a thing, is actually in receipt of and is correct. And so more critically, in a financial market sense, that could mean something like the real-time price of a given, let's say, foreign exchange or equities instrument rate, and especially in the case of foreign exchange, what could represent the reference rate for a synthetically backed stablecoin to ensure that this in fact tracks, reasonably speaking, on an intraday basis, the true value of the NAV that it's trying to follow, the net asset value. So creating that has been something that's been solved by a few different players in the industry from an Oracle solutions perspective. So Chainlink, I certainly think, is probably the best known and certainly the most used by every measure that I can see in terms of number of data sets, number of subscribers, number of different ecosystems that are sort of hooking themselves to that as their primary Oracle source, et cetera. But others like Band Protocol and API3 exist as well, which have different approaches. What they try to do is they say there can be a certain number at this point, primarily curated selection of data elements which they are willing to support in the protocol, but anyone who is able to source that true underlying market information can do so from whatever source that may be available from. So in the case of foreign exchange, there's a wide variety of potential sources of price for that foreign exchange rate. Certainly dxFeed has its sources, but there's various broker-dealers, various liquidity pools that exist from which that price can be sourced. And there's lots of public access to this information on websites, et cetera, sort of at a glance. And so a node, an operator of a service that delivers this data, is seeking compensation for the effort and time it takes to operate that by getting paid by the users of the data, essentially in unitized subscriptions to each event update of that information, maybe competing as well to provide that same information, and are all going to be attempting to ensure that this data is on average correct and accurate amongst those disparate sources. And so each of them may be subscribing to multiple data sets to get that information and provide it to this network. And so they may have outside costs in getting that, whether they're technological or licensing costs, to go and acquire that data and provide it to the Oracle network. So that kind of gives a sense of the ecosystem, and generally in the sense of something like a chain link, they're paying for that information in units of the native token of that ecosystem, but that may or may not be the case in all situations.
John, you mentioned Chainlink,
Mm-hmm.
and they're absolutely currently a favorite vendor. But you think that they will continue unrivaled, or do you think there are
Oh,
other
by no
players coming
means.
to the
By no
space?
means. No, I would say they've been an early example of a implementation that was novel and very effective for what it needed to be. But by no means will they be the only one. I think there's lots of other ways to take an approach on how to furnish that information. Some of these things are better for, let's say, real time and therefore streaming data sets. Others may be more appropriate for event based in terms of singular yes no type black white answers, whatever it might be that you're looking for to be supplied to a network. And the economic models that need to go behind supporting that can also be quite different, and so can the technology.
I'll jump in
So
here briefly if that's okay, John.
please go ahead.
First of all, thank you guys so much for putting this room together. I do some work for API 3, and we actually have a couple different other experts on API 3 in the room. Rob and Eric down that are listening currently both have legal backgrounds in the space. So if you guys want some legal perspective on decentralization, specifically when it comes to market data, oracles for Web3, you could bring either of them up. And I think Ugur does business development as well. So if you guys want to hear specifically from API 3 people, I would recommend getting some of those guys up there, assuming they're willing to speak. But thank you guys so much for putting this room together. I'll chime in as best I can. I'm trying to finish some work.
Sure. I mean, I'm certainly happy to welcome Ugur to the call and speak a little bit about how API 3 offers a different approach to that distribution and management of that data supplier to sort of ultimate consumer relationship. If he's willing to step in for just a moment here and describe that.
Yeah, and I'd love to hear. I don't know if I missed this. Maybe could you guys do a discussion on dxFeed and where you guys are from and what it is? I'm just curious.
Sure. Shall we jump into that first, Oleg? Perhaps, or
Yeah,
Dmitry, would you like to just take the floor and say a word or two about the company's history and why we're interested in the business of market data as such?
Sure. I can comment probably. So, hi everybody. So we've been, so the company itself we've been on the stage for 20 years. We've been building trading systems for bigger customers in the industry since 2000 actually, formed officially in 2002 from the initial group of people, and since then we've been perfecting our technology with companies like TD Ameritrade and Gain Capital and other players in different sides of the industry, let's say. So our core expertise lies in building A to Z stack for equities and options trading, and also in forex trading. So this is where the DNA came from. But back in 2008, we have understood that our clients are having data problems as well, and we are being blamed as a core vendor for the system. So we decided to go for our own data business. We started with the US market. Then we have grown over time to cover global, like different markets in different countries, so like having global coverage. Now we are present in United States, Europe, Asia, providing basically all asset classes as a market data vendor with many exchanges, direct connectivity, our own infrastructure, core data centers plus cloud. We're basically cloud agnostic, but deliver our cloud of choice is AWS at the moment, and we deliver both real-time and historical aggregated reference data to different players in the industry in B2B and B2B2C fashion. So being a player in the classic industry of data for financial industry, now we are seeing potential in what is called Web 3.0. So what we can offer there is we can offer really like quality, institutional quality data on chain, and provide basically all asset classes. So whatever will be most relevant and most demanded, we can deliver. So being a technology company in our core, like we can build a full stack also, or we can go into partner stacks and build collaborations easily, because we control our technology internally, right? So it's 100% our stack. So we are pretty flexible in how we can collaborate with different players in the industry.
I think it's also important to mention that we are have not only technological expertise in how to treat the data, work with big low volumes and payloads, but it's important the data expertise when we're talking about the creation of derived data, like some custom indices which we build for like big financial entities for several SEC-regulated exchanges, and we feel that such projects will be also required on chain when we need not only to deliver the quality, I don't know, FX, crypto, stocks data, but we can come up with some unique instruments, indices, derivatives, which will be required for the projects and for some particular smart contracts. And that's why we also decided to test the ground and talk to the community about such demands. So which data you feel will be like popular, required, and hard to find.
Thank you, everybody. So, John, going back to our original discussion, and who are the end users? Who uses this kind of data today?
So I think there's two things to be looked at there. There's the end users in the sense of truly the final consumer of the products that are essentially subscribing to this data set and maybe delivering it to them in a number of ways. And then I think we can also define the users of this in terms of some of the technologies that are the actual consumption point, creating value for those individuals at the end of the line. So in the sense of what are the platforms, I'll give an example of something like a synthetics, where you can essentially create, let's say, a custom instrument, which is to track the price of some sort of asset value which you are collecting from one of these oracles. So one that has come out recently that I've observed was the following of the price of Tesla, which was essentially creating an instrument through synthetics, which without owning any units of Tesla, managed an asset base such that the net asset value of each unit of this instrument that was created was in fact tracking that price on a fair market basis. So essentially a proxy for the share price of Tesla. You could use a similar type of setup to create an option, a futures contract, any other kind of complex instrument you'd like that tracks that, or anything else for that matter that can be achieved in that sort of a Web3 enabled data set. The ultimate end users in that example would be either people who are in the crypto community who are looking for new types of investment products or tools to make trades on short or longer term basis, and I would say also increasingly just the sort of the experimentation and the testing of what can be done within this technology set for more traditional financial services purposes as well, where that sort of thing is up and coming, and it becomes more of a sophisticated player play than necessarily what I'll call sort of technologists and sophisticated traders who are currently probably the bleeding edge of demanding and utilizing these assets and these products.
Thank you. And from the data sets available today, which one are currently the most popular? Equities, FX, etc. So, what do you think are the most significant, most popular today?
So from what I have seen, and I'm certainly happy to be corrected by anybody who's got better data, but my observations would be that because a lot of this is coming from sort of the digital asset side and sort of crypto instrument based sort of genesis of discovering and creating these tools, it's a lot of things that tie to those native assets from that environment. So, derivatives or other tracking that relate to the price of Bitcoin or to price of Ether, and similar sort of blue chip instruments or more unique instruments within that side of things. I would say probably second in line in terms of active consumption is probably foreign exchange rates. For similar reasons, it's a common building block data set for any number of different kinds of outcomes that might be built off the back of that. And sort of hottest, but probably least developed at this point in terms of excitement versus current availability is probably things that are more sort of real world asset prices, if you want to call it that. So like my Tesla example, US equities, other global indices, or commodities values, well-known benchmarks of that sort.
Very good. And then, of course, how do you see the future? And what kinds of data do you foresee will be significant in the future?
So personally, I think a lot of this sort of financial market time series data is going to be the core of what happens for the foreseeable future in one form or another. Improvements of delivery methodologies, improvements of the number of sources that you can get that from to be more resilient, perhaps things that can be done from a latency perspective or a data frequency and therefore granularity of that data perspective, or analytics and sort of pre-derived indicators of various data of that sort. So for example, where can you get let's say volume information in a Web3 environment? Right now, my understanding is that's either unavailable or difficult to source. So I may not want to track just, let's say, the market price of a given instrument that's available, but I may want to know what its average daily volume is, or its intraday sort of moment by moment prevailing volume is, or other criteria such as the spread around that in prevailing markets, things of that sort, which are currently not there, but would make perfect sense to also make available, or I would imagine highly likely to be useful for a number of different purposes. And after that, I think it comes down to seeing what gets invented as far as tools to make use of these data sets that will drive demand, where we may see very new and novel things that are difficult to predict at this point that just suddenly cause a massive spike in curiosity around some new data set that is not really seen its day yet.
Maybe I'll also just jump in there for the future part. There's also like a couple of insurance protocols or insurance that relies on, for instance, flight data, where people can, in a decentralized way, insure themselves against flight delays, or even crop fields where certain weather or disaster data is taken and a payout happens on a completely like automized way. And another cool example that I find very attractive is, I'm not aware if some of you know Chiliz, which is like a chain that tokenizes pretty much sports teams. And they are burning also tokens on the basis of how a team performs, and they need live sports data, for instance, when a certain goal is scored, when it is scored, if a certain team won, and all that sort of.
Thank you, Ugur. Appreciate it.
I was going to say that's an excellent example of where we haven't even really begun to do more than scratch the surface in terms of market information, but of a very different kind of market, right? The professional sports and any other kind of enthusiast class of activity where there's just the interest, the value for collecting that information could be for something as elementary as betting, but also the Chiliz platform, as you mentioned. Like there's just so many cascading potential areas of interest for all kinds of stuff.
Excellent. I'd like to open up for the audience for questions. Hello, questions? No questions?
If there are none, I can also jump in and maybe give like
Please.
a small intro of API 3, since that was
Yes.
asked before. Again, thanks for having us here. I guess I'll pretty much start how we came to be. We started off as one of the, in that sense, leading Chainlink nodes in the Chainlink ecosystem, we had a marketplace called Honeycomb API Marketplace, where we try to onboard API providers and make them, in that sense, provide their data for blockchain applications. And during that time, we came to know how or what the API providers are actually struggling with, and all of that. In that sense, knowledge that we were able to gather allowed us to come up with API 3, where we had like certain deal breakers for these API providers, why they don't want to provide their data, even though it is another avenue where they could monetize their data. And those were very different things. For instance, operating a Chainlink node required some sort of blockchain expertise within the company, which a lot of these API providers, they are oftentimes smaller firms, simply don't have and don't want to get, because it might not even be worth it. It's also very, in that sense, how should I put this, troublesome for a lot of these providers to deal with cryptocurrencies. A lot of like operating a Chainlink node requires you to deal with cryptocurrencies of some sort. Either you have to buy Ethereum to fund your wallet and deal with transactions, and you get paid in cryptocurrencies, and that is just something that is very troublesome for a lot of these providers. And there are like certain other examples that's just making this entire process very difficult for these providers, even though there's a potential market for their data. And out of all of these informations, we pretty much came up with our solution, which is called AirNode. And you can imagine this as a simple Web3 gateway that is hosted by the API providers themselves. So compared to what is currently out there, for instance, with Band Protocol and Chainlink, it is not something that is operated by a third party. It comes directly from the source, and is also configured in a way that, first of all, the API provider doesn't need to know anything about blockchain at all. It is pretty much a one-liner in Docker and set up in AWS as a Lambda function. And once it's up and running, it's configured with the API key of the API provider, and from that moment on acts as a gateway for any chain that it wants to connect to. And potential customers can then approach these API providers and get white labeled on their node to access their data. And this process is, just from the perspective of the API provider, eased down so much that it just becomes attractive for them to do so. And we get to know this with all of the calls we're having with them so far. And we believe that this will allow them to pretty much, or allow us to pretty much onboard any type of API data that John was also speaking about. Like, there's no volume data out there. There's no spread data out there. Why is that? And that is just because of the fact that a lot of these providers have these information available, but it's just too complicated for them to make it available, which is what we are trying to battle in that sense.
Thank you, Ugur.
So I actually like to just pick on someone I see in the audience, a digital asset market maker, a colleague of mine, Austin. I'm just curious if he'd like to comment the kinds of information that he might, as a consumer, potentially look to select from such an environment. And I point at him partially because I also know he has a personal affinity for machine learning and collection of sentiment and other similar data sets for potentially how he might look at the markets. So he might have an interesting perspective on how he's come across anything in the space or what he might look for.
Well, I invited Austin to speak, so I think you have to press the button or something.
He can be shy too, so let's see if he picks up on this. If not, that's perfectly fine. We can move on with our topics. But oh, there we are. Go ahead, Austin.
Hey, John. Yeah, sorry about that. Thanks for inviting me here. I'm actually just in the car driving, so I shouldn't be on my phone at the moment, but maybe I can chime in on the next one. But thanks for calling me out.
Very good.
Okay. Sorry, Austin, I didn't realize to put you on the spot. perhaps just some insights I can provide that I've heard from similar types of firms, because I do think it is relevant. In a lot of cases, one of the things that can be difficult is to figure out, let's say your perspectives on something like a market index or a market risk within the digital asset space, right? Where do you draw some sort of general indicator for a broad-based part of the industry to have as, let's say, like a volatility measure for a circuit breaker, for example, like when in the equities markets, for those who are familiar, if you have an S&P dislocation in price by a certain number of percentages, there's certain things that take place as far as the market halting and allowing the market to catch its breath. And I would say right now there isn't necessarily sort of a standardized, well-followed benchmark for that kind of data element, but I think something that could be distributed in a utility-like environment, like a Web3 data endpoint, could be extremely attractive for making a reference for something like that, where people can understand this is a high risk day, a high volatility day, otherwise day to be cautious about how you're managing your spreads and your positions, for example, or possibly a time to take more aggressive positions because you do see that there's something in that information that gives you comfort in your strategy towards how you approach the market. So I'm gonna just say, I believe on Austin's behalf, that probably is something he'd agree with if he needs to stay on mute and stay out of the ditch on the roads out there today. Just a thought I thought I'd share.
Well, maybe I can comment. So the history of financial markets, it's like, I don't know, maybe 50 years, and we have a crypto industry which is relatively like young comparing to traditional markets. And you mentioned that like S&P and Dow Jones, and there are lots of indicators or indices for traditional financial markets. We did a check with Oleg yesterday that, for example, we in dxFeed universe, we do carry 800,000 of indices, basically. More than 800,000 of indices from traditional financial industry. So what do you think will be the evolution of such indicators in a crypto space? So we have to like create industry standard VIX index, or like what can be the next developments in this space?
I think my personal view is, most benchmarks in traditional equities markets, for example, focusing on the ones that you mentioned, like the Dow or the S&P, they've come to be recognized not because of their technical perfection as far as representing the market fairly, but because of just adaptation and becoming by sort of de facto the standard that everyone relied on, because it was either the first or it was just an easy way to provide sort of a quotable proxy verbally or otherwise to track what's going on. I mean, the Dow is itself conceptually from an architecture perspective a poor representation of overall market activity. I think within the digital asset space, it's probably going to be driven by either a large brand that creates some sort of essentially self-determined methodology and statement that this is our way of assessing how we view certain aspects of the market, or it may also come from some sort of follow-on use case where the first major provider of some sort of prolific derivatives, other than just, let's say, a simplistic single instrument derivative price, could become the driver for why that index becomes quoted and popular. So if someone were to say there's I'm just going to pick a random example, a crypto top 10, a top 20, a top 100 index that gets a great futures and or options type environment around it, that could become a very widely followed index just to have a sense of what overall is going on. And a lot of people look at the sort of prevailing market cap on the coinmarketcap.com website, for example, as far as just that absolute total asset value of all the instruments tracked is a relatively good standard for what this industry is doing as far as its absolute growth. But that's a very difficult one to produce, just given the extremely large number of tail instruments that it's just not economic for most people to track. So something along those lines, though, could be an interesting way for something like that to get created and become a standard in the industry.
Yeah, because well, I also, as a retail crypto investor, so I met the situation when there is such a big number of like coins representing different kind of like technological firms and business models behind them. And for example, I managed to purchase a index like a DeFi Pulse index, which is comprises maybe I don't remember exactly, like 14 tokens of the companies working in that space. And I think it can be like a first idea and attempt to create an indicator of a particular sector in this crypto universe.
Mm-hmm. I agree, and that actually reminds me. There is one exchange which has been a fairly advanced provider of essentially portfolios or indices and subsequently immediately derivatives products against that, and that's FTX.com. And FTX as an exchange is run by the same people who run Alameda Research, which is one of the largest digital asset liquidity providers, probably doing about $1 billion a day based on a number I heard quoted not long ago in public media. And they actually, as a background, come from, at least the founders come from Jane Street, which is a fairly well-known, well-respected electronic trading firm in the equities markets in the US. So they're certainly the types of people who understand what we're talking about as far as why the markets would evolve from the sophisticated traditional to delivering some of those same things in this nascent space. So they created thematic portfolios. So for example, DeFi as a subset, but also, excuse the term, but a shit index for instruments which fell into a certain category of quality and essentially ironic value as far as why people cared about them, and other instruments of that sort where there was a reason to create a grouping and then to create essentially a futures or other way of following and investing against that or speculating on the price of that index.
Let me ping. I know a couple guys from FTX. I think they're probably asleep right now, but let me ping a couple of the guys and see if I can.
That'd be fantastic. If I don't expect Sam Bankman-Fried to get on the phone for us, but anyone else like that is always interesting for something like this. And the other reason I would say that, and just focusing within the instruments that come from that space, but I think this applies equally well to any other data set that can be produced into an index, but a lot of the value that comes from creating that sort of, let's say, the DeFi Pulse Index, and specifically the investment token that is available that represents its value is because some of these assets are still so boutique as far as their availability. Their physical access is through arcane methodologies for those who understand what they're doing in terms of getting down to either platforms or protocol level interactions that are appropriate for someone who really can technologically deal with that. But for the majority of people, that may be too far down the rabbit hole, so to speak, or just managing more than a couple of those is just unwieldy from a time and sort of bother perspective. So creating this kind of portfolio product is a very convenient way to just like any other ETF, quite frankly, to get into something on a larger scale basis and just track the total value without having to manage all those components. And the component management can be very, very unpleasant technologically and sort of administratively in this space. So there is a lot of value potentially in doing that if it's marketed appropriately and there's an immediate set of financial products to create sort of the value for the index itself in practical terms. But
Let's
same could be said for. Go ahead, Antonio.
No, just see if Michael manages to get more people to join. Otherwise, if there are other interesting topics that you would think in the interim that you'd like to bring to the attention of the room.
John, could you discuss some of the Oracle indexes? I know there's at least one. I think there might be two that are going to be launching soon.
I'm not sure which particular Oracle indices you're thinking of when you say that.
I think there's one that's being launched by Indexed Finance.
Indexed Finance. Unfortunately, I'm not familiar with what might be on the horizon.
Let me see if I can.
Okay.
Yeah, so Index Finance is doing some sort of top 5 Oracle index, basically. So similar to the you were just discussing the FTX, the shitcoin index, and then a couple of the other ones. There's one program and platform that's launching. Basically, I think they're a newer platform, and they're doing a decentralized finance one, and then they're doing an Oracle top 5 index, which I believe is Chainlink, UMA, Band Protocol, API 3, and one more. I can't remember what the other one is.
All right.
Right. Okay. Yes, I'm just searching for this as we're discussing, and I did find this posting. To be honest, I mean, I don't know the methodology just because I'm absolutely for the first time ever seeing this just as we're speaking. So I'm going to assume this is some sort of either volume or market cap or simple weighted composite of essentially these consumers of and providers of these Web3 enabled data sets. So again, from the call, we have individuals from API 3. We've talked about Chainlink as well, and certainly UMA and similar platforms which produce the resultant instruments that subscribe to these data sets are like a very appropriate grouping in that respect. So this is actually quite interesting to find. So again, what's interesting about this now is if you think about this conceptually, the availability of this index and the publication to the network through whichever one of these platforms that actually hits the ecosystem, so to speak, you could go right back to a UMA, to a synthetics, to an equivalent, and produce an on-chain investment into this on a synthetic basis. You could go to just the index data feed source and go to a protocol called Open, if people have heard of that, OPYN. Tie that to this price feed and use that as the reference for creating a cash settled option, such that you can essentially hedge your position in this basket if that's something that's relevant to you, or obviously take any kind of directional speculation you wish in that respect as well. And so essentially, if you can invent it, you can produce it. And I think what's worth highlighting is within the Dev Experts business, if anybody has some creative idea in producing some of these things, the actual index methodology management, the benchmark administration, as it's known in the traditional finance world, is actually a very important role to provide, and requires a lot of I would say a lot of process management, a lot of sort of expertise and excellence in that process to ensure that it is correct, it is accurate, it is timely, and it is available at every interval it is meant to be available intraday. And that's something that if someone were to have, let's say, an interesting index that could come from the traditional instrument set that needs to be produced from, let's say, equities markets or foreign exchange market prices, or obviously crypto prices as well, Dev Experts could be able to produce that data set, and then through what we're talking about here with any one of these Web3 platforms, get it to a state where it's available to distribute into this ecosystem, and then have all those follow-on products created off the back of it, which might be the ultimate reason to have it produced in the first place. So if anybody's interested in discussing that, we're certainly happy to speak more to how that can be done.
Very well. I see we have a couple more people in the audience. Maybe someone wants to raise a question. I see Mason and Rob. No questions.
They're pretty much all part of our little
they're
group.
Okay. 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 We'll give it just a little pause. And Dmitry, do you have any other suggestions or topics?
Yeah, so maybe, yes, if like our partners from API3, so they are dealing a lot with API providers, but I think they are like one hop closer to the users of the data from the smart contract. So maybe they can tell us a little bit more. So what is really the problem of quality? So how do you manage, for example, some, I don't know, fake data coming into blockchain, and or the interruptions? Is it a real like problem right now? Because as I pointed before, so the classical market data industry is like many years older. So that's why these problems are more or less solved by like industry known providers. But in crypto space, I think that quite of this problem will be new to like participants. So maybe there is some opinion on that.
Yeah, so I think one of the cool things about API 3 is that a lot of our focus has been kind of based around friction points in the industry, especially when it comes to like getting buy-in from off-chain businesses, right? So like a lot of these businesses, they don't necessarily have the time or money, to like invest in a blockchain development crew. The idea of third parties like managing their data and so on and so forth is very unappealing and unattractive. And so our entire approach is really focused on, our experience in the honeycomb marketplace with, just things that we ran into that were clearly blockers for a lot of customers. And so now, basically what we're doing is, we're making it very simple for people to, connect their data and become accessible to on-chain platforms and applications just by running AirNode, which is essentially a very lightweight serverless function that kind of, essentially allows their endpoints to be accessible, right? And then, let's take it further and talk about like pricing data and, kind of getting more into what Dmitry was talking about here. When you have, let's say, 50 different people who all have endpoints in the API 3 ecosystem, let's just say hypothetically for, pricing data. Well, at that point, you can actually wrap it all up into what we're calling a decentralized API. And that way it serves a variety of purposes, right? Like we can actually provide quantifiable insurance. So there's like an insurance element to it. And then also, just in general, if one of these data providers are compromised in some way, because the decentralized API is an aggregate of endpoints, it usually should have some sort of a statistically insignificant impact on the overall marketplace that is actually getting that information for their platform or application. So it's, our entire business model is designed to solve a lot of these existing problems that have kind of plagued the Oracle space. And I think the way that we're going about it is just fundamentally different. And it's very forward thinking. And, it's really exciting to be on the team.
Thank you. Maybe one part that we should also add is because you were also wondering about like data quality and like how you can make sure that the data is actually worth something. And compared to what is currently out there, for instance, if you think about a Chainlink third-party node that is just relaying the data, you always face the problem in that sense of if that one node is actually misreporting or not reporting directly. Whereas if the data providers themselves run these nodes, you have let's call it a real world business behind it. For instance, if you as dxFeed would be running an air node and would provide that air node, you kind of have a reputation that your data is worth something. And by providing falsified data, or in that sense, like bad data, you're in that sense, real world company reputation could be hurt by that. And that is like the main driver. It is not it is a business, real world outside business that can be approached instead of a possibly anonymous third node operator that is relaying.
Thank you very much, Ugur. I would go back and ask John if there are no other last topics for discussion. I don't know if anybody else wants to bring.
I'll just say from my own perspective, I find all of this to be a very exciting set of evolutions from where I think anybody on this call who's come from a traditional market data space, and I specifically mean by that financial data space, knows the process, the methodology, the various ways in which all of this intellectual property is handled, and the pipes that sit behind it, and just some of the elegance that some of these solutions can bring are going to be very interesting to follow. And I think there's a lot of questions that have perhaps not yet been thoroughly addressed that I'm thinking of, and I won't necessarily yet spoil a surprise on this call, as I think that's probably a topic for another time as well, as far as protection of intellectual property rights of some of the content owners behind these data sets, which is going to have to be handled differently going forward, or other novel factors around how compensation models should work for content providers who are owning the data that goes into these data sets that now have a very different distribution version and control versus historically, where if S&P or someone like that sold access to an index, there was a lot of very heavyweight control requirement around that, and Web3, that's a very different looking environment for a lot of reasons. I think there's good that can come out of this that shouldn't be taken as a statement of anything negative. So I'm certainly excited to continue to watch this, and I think it's a week by week evolution where some innovation of one kind or another comes out that can potentially add a lot of value or change substantially what can be derived from all of this. And so I'm certainly interested in seeing perhaps a repeat of this call at some point soon with either expansion on some of these subtopics or a review of and then rehash of what's come up since.
Thank you very much, John. Then we just have somebody join, Alexander. I don't know if,
yeah, Alex is a good friend of mine, actually.
Okay.
So yeah, we used to work for another industry, but I think the technological aspect of our discussion also might be interesting.
Okay. I don't know. There's if Alex has any questions. We have 45 minutes now of discussion, and I personally ran out of questions. I think we debated a few topics of great interest. But if there's no other questions or interest, then I would just have John. I think you made your final statements as well, your final comments.
Absolutely, I think
very
much
good.
to be continued in a subsequent event, perhaps.
Yeah, excellent. Okay, then by the powers in me invested, I declare this Clubhouse conference ended.
Thanks so much, everybody.
All right.
Thank you. Thank you so much.
Yeah, thanks. Bye.